Well, hi there, everyone, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. Now, today is Wednesday, February 4th, and my name is Raleigh White, and I'm coming to you live from a beautiful sunny day here in Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Rogers is going to be covering a range of important topics, including a review of today's market action. He's then going to share with us those fast moving stocks, and he's going to give us an update for what his large cap watch list is here at midday. And then we're going to shift gears a little bit. We're going to talk about an analysis and a review of the top 20 major sectors. Then Roger's going to spend a few moments with us reviewing trading psychology and controlling our emotions, which is probably the number one thing we all need to focus on. And then we're going to have a lightning round. We're going to set aside, 10 to 15 minutes to review your favorite stocks. In other words, when we tell you, give me your tickers, I'll collect those, I'll give them to Roger, and we'll do a lightning round. And then we'll conclude today with a special guest. Kane Shea is going to be joining us, and he's going to be sharing how he finds trades on a daily basis. Now, if you've got any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with his presentation. And also, folks, remember that I've opened the chat to everyone, and remember the ground rules. Always be kind and supportive in your posts. Keep to the topic. No political discussions allowed whatsoever. And also, folks, keep side conversations between one or two of you to a minimum, because all it does is distract the rest of us from focusing on the education and the information that Roger's sharing. Because after all, we're here to have him give us an edge in the market and to help us all become much more confident and consistent in our trading activities. Now, for those of you that were with us this morning at 8 o'clock for Roger's pre-market briefing, and I certainly hope you were all here with us, we noted that there were several key catalysts on tap that we needed to be aware of. In the chip technology sector, we noted that AMD was coming into the open down 6%, but SMCI was up 11%. And we also noted that Uber and CTSH were getting ready to release their earnings before market open. In the consumer front, TTWO was up 5%, but CMG was down 6%, with Yum getting ready to release their earnings before market open. On the healthcare front, we had four key companies getting ready to release their earnings before the open: LLY, Lilly, AbbVie, BSX, and COR. On the finance front, we had three companies getting ready to release their earnings: CME, BAM, and UBS. And then on the industrial energy front, we had Johnson Controls and Phillips Petroleum getting ready to release their earnings before market opening. So a lot of activity on the earnings front there as we come into the open. And then as from the Fed standpoint, we had ADP reports coming out, ISM services, crude oil inventory, and we have two Fed speakers scheduled to speak this afternoon. So those were the catalysts. And for those of you that are wondering, why do we even focus on these things? Well, from Roger's perspective, if there's information that becomes known, let's say in overnight, or will become known during today's trading session, these represent volatility flashpoints because that information is not yet priced into the markets. So we just need to be aware. We have a heads up that there could be movement in these sectors associated with these events. And that's something holistically that we need to be aware of. Now, as far as Rogers pre-market stock watch list is concerned, he shared with us 23 tickers that he's got his eyes on. On the short side, you can see that there's some pretty big companies up there, like Netflix and Oracle and HPQ. But once again, these were all on his short side. As far as the longs are concerned, interesting here, very few tech stocks, a lot of energy stocks sitting there right up here in the front, but there were 14 long stocks that he's looking for. So let's be clear about what these are. Every morning, Roger looks at the markets to find out which of those stocks are setting up to give signals to potentially go long and short. So these are legitimate tickers that he's looking at. But that doesn't mean that these are automatically tradable. It means they're setting up for potential trades. And he keeps an eye on this throughout the day. And if any of these stocks meet his criteria for either going long or short, more often than not, these will be posted in his trading pit or in his other premium alert services. So, once again, this is what he sees in the market, pre market. And being with us here today, part of the agenda, he'll give us a midday update as to which stocks are looking good to him at the middle of the day. Now, as far as his pre-market thoughts are concerned, we noted that the futures markets were fragmented coming into the open. What we mean by that is that we saw the Dow and the SPY were both up, but the tech stocks, the NQ, was down. So the markets were fragmented. We noted that the put to call ratio was back in balance, but the VIX was up in its channel at about the 18 level. And that's that point at which when it gets above 18, it's kind of warning here that the fear factor is getting a little bit too high, which could mean a downdraft in the markets. We also noted that SPY, QQQ, SMH, and the MAGs were all sort of moving sideways and consolidating lower right at their key support levels. As far as momentum's was concerned, stocks were fairly balanced. What we mean by that is that the number of stocks that were making 20-day and 90-day highs were offset by those making 20 or 90-day lows. And that's okay. That's fine. That means movement and rhythm in the market, and that's good. But on the sector front, things were still fairly mixed. As a matter of fact, it looked like more defensive stocks were working their way up on the sectors. As far as the bonds were concerned, they still remain down in a downward slope. And he drew that for us. He showed us that bonds have just been moving slightly lower in this channel, and that's where they are today. And he also commented, look, from his perspective, there's just really nothing here moving the markets. So what does he expect? He expects continued choppiness in the market. And this is a market to be cautious about because without any significant thing to move the market, chop is going to be the name of the game. As far as energy stocks are concerned, he said, look, they may look attractive, but stay away from them early because the crude oil inventory report could certainly have an impact on that. So these were Roger's views coming into the open today. And once again, we want to thank you all for coming. We've got a terrific group of folks here, as we always do. And in that regard, Roger has put together a terrific agenda. First of all, he's going to review today's market action. He's going to share with us those fast-moving stocks and give us an update on what his large cap watch looks like at midday. He's then going to go ahead and shift gears and give us an analysis and a review of the top 20 major sectors. And then, and I think this is great, he's going to spend a few minutes talking to us all about trading psychology and controlling our emotions, which is probably the number one thing we should be focusing on to help us become a little bit more consistent in our trading. We're then going to have a lightning round. We're going to pick about 10 to 15 minutes where we're going to review your favorite stocks. Yep, you heard it, folks. When we're ready, I'm going to ask you to give us your number one favorite stock, and Roger's going to take a quick look at that. As a matter of fact, we're going to have Kane with us here as well, and he might be helping with the analysis too, as Kane's going to come on board and share with us how he likes to find, daily trades. Now, if you've got any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. Also, folks, remember, I have opened the chat to everyone, but we do have some ground rules. Always be kind and supportive. Keep to the topic. No political discussions allowed whatsoever. Keep your side conversations, please, folks, your side conversations between one or two of you to a minimum, because this is not a chat room, folks. This is an area where we have come to focus on the education and the information that Roger is going to be sharing. So he's here to give us an edge in the markets and to help us all become much more confident and consistent in our trading. And with that, hey, let's say hi to everybody. Let's say hi to Matt. Let's say hi to Roger. Guys, how you doing? I know you've been busy today. It's been been an interesting market, I think, coming into the open. As a matter of fact, looking at the charts right now, the one thing that I kind of find interesting is that we know that the SPY and the QQQ are both kind of trading down, but the Dow is doing pretty well. And this is
Yeah.
kind of what Roger was talking about. He said, man, these defensive stocks and the blue chips, they're having favor now. Roger, is that how you read it?
Yes. Yes. Absolutely. But with
Hey, we
that
need your
said,
camera on, buddy. If
oh, thank you. I didn't see that. I, I did not notice that. I appreciate it. Otherwise, I would have been here all day with my
I
camera
wouldn't
off.
have let you do that.
I'm just so focused on the market, that
Yeah, yeah.
yeah, but I am here. I've been here. I've been just kind of listening to you for the last few minutes. Sorry about that. I'm in my own little world, at sometimes. Mm.
No, that's great, Roger. So once again, you heard me do the recap as to where you were coming into the open. And like I said, I keep an eye on the markets also as we come into the session. And there is a bit of a divergence going on here.
Yes, there is. As a matter of fact, let me share my screen with you here, and you could see that. You could see right here actually what's going on right now. This is really good to be able to gauge that. And remember what I said this morning. I said, remember when I drew that line on the VIX?
Yeah.
I said to you that we're not done with this. We're not done with this mess yet. It's just choppy. And I also said something yesterday that was really important. I said that we are in the most dangerous type of market right now. I said we're in a market where we have a lot of volatility and we're not going anywhere. Remember I said that yesterday? Big, big, big. Sometimes you have no volatility and the market doesn't go anywhere. That's just frustrating because nothing happens. It doesn't sucker you in. But in this case, you have a lot of volatility, but markets aren't going anywhere. So just to start off, here, let me give you guys a good analogy of where we are right now. This morning, I told you that technology, actually, I posted it right on the Telegram channel. I said, well, here, let me show you. It's one thing talking about it in hindsight, but it's another thing talking about it when you actually, right here. The weakness is fairly isolated so far, not pushing price lower to far chop. That's 1040, sorry, right here. There it is, right there. I said tech is the outlier today. We still have Google and Amazon next 24 hours. Be careful, bonds are very weak support. If they break, it can be a punch in the gut. You see, the problem here, and I said it to you guys this morning in the morning show. I said when you have divergence, first of all, it causes this in the market. But what happens is these stocks, these assets right here, will either pull this up or this will pull some of this down. Okay, that's usually what happens. And you could see right now, utilities, basic materials, but not communication or consumer cyclicals. So we could see that this selling pressure, if you look at technology right now, you could see exactly where it's focused. It's not really the overall, it's not software. It's here. It's components, semiconductors. You could see it right here, right there, right here. Computer systems, semiconductor, electronic components. It's very targeted. It's very, very targeted. This is nothing right here. 1.6, the infrastructure. This is nothing. And solar is doing really, really well. So this kind of gives you a whole outline of sex. But you can see right here, chips, semiconductors, chips. That's what's causing the problem today. They're bleeding today. Hey, Kane, good morning to you.
Hey, how's it going? Good to see you.
Good.
Hey,
How are you?
there's Kane. Good to see you, Kane.
How are
Hey
you feeling?
guys. Hey, bro. Better, a lot better. Not 100%, but I'm pretty close to it.
That's good. There's something going around. My daughter,
Cruds. It's the winter cruds.
my daughter just had it. My other daughter has it. A lot of people have it. And my wife has some really bad allergies too. I don't know what's going on this time of year, but she's been sneezing nonstop for the last 2 days. It's just I've never seen it like this before.
She
She's
smells
like,
a rat.
he smells a rat. Exactly. So anyway, and Kane, please feel free to join the conversation. Okay. So
Sure.
as I was saying, technology right now is really, really taking it under the chin. You could see it right here. These have their own sectors, but you could see where the weakness is right now. It's not really broad market based. I mean, real estate, consumer defensive, communication, consumer cyclicals, energy stocks, financials, healthcare, they're all doing really, really. They're doing fine. It's the technology and more specifically chip stocks. And I think that's very interesting after AMD actually had better than expected earnings and their numbers were actually better. I'm not expecting this downside draft to continue very much. And you could see we're at support here on AMD. There's a lot of support right here at this gap. You can see it right there. So Not expecting too much of a downside on AMD. I think AMD will bounce pretty good from this in the next couple of days, actually. Maybe even today, but it is being driven by semiconductor stocks. That's one of the things I love about TC2000. It breaks down all the sectors and what everything's doing and so forth and so forth. Anyways, one of the things I wanted to do today is I wanted to show you this. This is relative strength. So you could see in the morning, semiconductors. This is ProTrader dashboard, by the way. I just use the ProTrader dashboard so much that I have it on here so I could see everything with all the major sectors. And what I have here is SMH, the semiconductors, equal weighted SPY, QQQ, the Magnificent Seven, IWM, and the Dow. Now, do you need to have a separate thing like I have? You probably don't need this. You could probably just put it on a ticker like this on one of your charts, like this up here, and you can look at them here and it'll be just fine because I'm not trading these. I'm just looking at them. But one of the things I like to look at is relative strength and weakness. And you could see when we opened up in the morning right here, literally right when we opened up at the opening, right at the opening, 9:30 and 10:30, you could see we were really, really weak in comparison to the equal, let's just say blue chip stocks. I called the Dow, RSP, blue chips. This is blue chips. Defensive stocks, blue chip stocks. I use that name interchangeably. But you could see right here as the day progresses, here, let me blow this up for you. You could see right here as the day's progressing, relatively speaking, chips are actually not getting weaker. They're actually getting stronger. And the weakness is now starting to move into the broad market and back into semiconductors. You see that? So chips and QQQ, while to a naked eye, it looks weak right now, it's actually gaining relative strength and getting a little stronger to the market. And you don't have to believe me. You could just look at the red. You see how the red is disappearing? And you see how here the green is disappearing? It's right there in front of your eyes. Look at the Dow. The Dow blue chippy, right? Look here. Look at the green. It's getting weaker, right? And look at the red. It's getting higher. If you keep an eye on this, if you have the ProTrader dashboard, you could set this up for yourself. Even if you don't have the ProTrader dashboard, you just won't have this. But what I'm suggesting is you should keep an eye on these assets throughout the day. And again, I'm not trying to sell you the ProTrader dashboard. I'm just saying that it helps me because I don't even look at this during the day. I look at this right here and I could say very quickly, I just look to the right. It's on my right screen. And I could say to myself, money's coming back into technology. Money's shifting back into chip stocks. And this will happen throughout the day, but it's really useful to have that, okay? But just so you know, we bottomed out on chip stocks at about 10.25 in terms of relative strength to the market. And we've been going up for the last, an hour and a half, 2 hours? About an hour and a half here. So it looks to me like investors are starting to bid a little bit on the chip stocks and the technology stocks, which is also, chips are driving tech today. Okay. Didn't mean to get into all of that for you, but and I have it right here on my right screen, and I look at it extensively throughout the day, Okay. Overall market behavior, as you could see right here, the SPY is right at the 50-day moving average. The 50-day moving average usually holds, at least the first time, second time. You see how here, it right here, and right here. We don't really have, aside from this mishigas that's happening with semiconductors, we don't really have that much going on in the market. So I don't want people to start thinking the world is coming apart, the world is crashing. None of these things are happening. And we're at the 100-day on the QQQ. I think this is going to offer a support level for now, and I think we're going to hold. Okay, so I'm not really seeing any craziness or anything like that in the overall market right now. Not yet, at least. As far as market internals, you'll be surprised to know that all day today, even with this bloodbath, we've been in positive on ADD. And that just illustrates that this is just another way of me saying exactly what I showed you right here, that the biggest culprit is right here. You take this away, and the market starts looking like this here. This is what the market looks like if you strip away the market cap right now. That's what the market looks like right now. That's the RSP right now. So does that look to you like we're taking a bath or we're bleeding or anything like that?
No.
No. And by the way, this does not exclude chips or tech. This just assigns an equal weight to all the stocks in the S&P 500.
Mm-hmm.
And we're like a fraction away from making all-time highs. Okay? So a lot of people, in my opinion, right now are getting suckered into the short side. And I don't think there's a significant reason for that to happen, especially when you see something like this. Most of you didn't think this looks like this right now, but it does. It looks actually really nice. So anyway, just my 5 cents. The market's not broken or anything like that. Okay, with that said, I want to go through some major sectors for you. I think it's actually, in light of this downside move, it's a perfect time to do that right now. I think it's actually the perfect time to do that right now.
You know, it's interesting, Roger. I think you're bringing up an excellent point there. And another way, I was talking to some folks about it yesterday, and they were lamenting the markets. And the thing is it's the sideways move, it's the choppiness which making it difficult. And what that does is that tends to color your vision as to what's going on. But as you said, the markets are at all-time highs.
Yes.
At this
Yeah.
point, the sky is not falling, but it is a very tricky market to trade.
It's very tricky. It's one of the trickiest markets I've ever. And a lot of people are like, yeah. He's always saying that, but I'm not. I'm not always saying that. Like last year was a picnic compared to sorry, I forgot we're in 2026. 2024 was a picnic compared to 2025. I mean, we still did great. I'm not making any excuses for anything. All I'm saying is that this is a very challenging market, and one of the biggest reasons is because we're not getting any help from the mags, right? Mags have not been helping us out. Chips have been extremely volatile lately, and you've got things. Small caps have been actually coming up as the bond market. Remember, I showed you guys this in the morning, and I keep bringing this up, and to me, this is really big. I mean, we haven't been here since September, folks. September. Look on a 15-minute chart what it looks like. I had to go here. I can't even pull it up here. I have to. Here. Maybe I can. Hold on. Yeah, I mean, look. I can't even. Let's see. Maybe on a hourly I can. Yeah. Look at that. September. See for yourself right there. September. That's not great. But again, the market seems to be doing okay. And I think one of the reasons why the market is holding up so well is because basic materials, the silvers, the golds, the basic materials are kind of offsetting things a little bit right now. But there's nothing wrong with the market. There's nobody, the momentum levels are okay. There's nothing crazy going on right now. So I don't want people to really panic or anything like that. Okay.
Right.
With that said,
actually, one
yes.
quick thing. With the introduction of the 3 times a week options in the mags, so the individual mag stocks, that increases short-term volatility and decreases long-term volatility. So when you have event type of risk and an event type of volatility, that loads it up in those short-dated expirations and then takes it off of those longer-dated expirations. So this week we see a lot of earnings in the mag stocks, like Google and Amazon both have earnings. I think Apple was last week. So where you would see that volatility in this Friday's expiration, you're seeing it instead in today's expiration, for example. So that is playing into this current market as well. Mags happen to be heavy in chips, and you're seeing that today.
Yes, absolutely. 100%. 100%. Okay. So I'm going to break up and do the analysis for. I'm going to go ahead and do the analysis for the.
On the
Uh,
sectors?
yeah, I'm going to do the sectors right now. I'm just going to pull it up so I can gauge them, so I don't have to repeat myself because I have them written down here on my. I have them right here. Okay.
People, by the
So,
way, Roger, really appreciating your comments, Kane, your comments
oh,
as
thank
well. I
you.
mean, folks, isn't it great to
Thanks.
have guys like Kane and Roger here with us talking about the markets, what they see going on, as opposed to just random people?
Yeah, you don't want any random people.
No, I
You
mean,
don't want any
talking heads
random.
and things of that nature. You guys are just, you're wonderful.
Thank you. I appreciate that. So again, we do have some volatility. I actually went long this stock today. I usually don't do this. My third time I've ever done that in 2 years that I've picked a stock at the bottom, and I picked the wrong bottom, and it's going down, but I still really like this stock, and it's about 11 it's about $11 a day volatility. So the good thing is we got it right here off of the 15. We didn't get it right here. We got it right off of here. So if AMD comes back in the next day or two, if SMH comes back, we'll be sitting really pretty on this stock because we got a really good entry on it. But anyway, I don't even know why I'm bringing that up. I'm bringing it up because I'm pretty sure a lot of people have questions about it. Just remember, $11 a day volatility. So it can move. A lot of folks, they look at a stock and they think that they don't realize how much the stock moves on average. Okay, XLE, let's start. Well, I mean, what are you going to say? That looks fantastic. I mean, we all want the market to look like this, right?
Hmm.
This is very very nice, very very nice. Matt, are you long or short right now?
I am nothing.
Oh, I am nothing. Okay, all right.
I'm kind of looking to get back in long. We just got out of our short.
Did you make money or did you get stopped out?
Oh no, we made money.
All right, that's what I wanted to hear. All right, let's continue. So I can't say anything about XLE except that it looks fantastic right now. Let me just take a look at FCX. Yeah, interesting. Right off of the 8 day. All right, let's look at XLF. XLF actually looks like it's now this. I like this pattern. This is great. I could show you this pattern, folks. I see this happening all the time. When I say all the time, I've mentioned it to you many times. Finally, I could show it to you. So a stock is moving up. Okay. It just happens to be an ETF, but I see this pattern all the time in stocks. The stock goes up real nicely. It starts breaking down. It breaks the 50-day moving average, but it sticks to it like right below it. It sticks to it like glue. And then for about 2-3 weeks, it consolidates right here. And then when it breaks the 50-day, it just starts coming right back up. So if you, and this is a longer term pattern, but I've been seeing more and more, and more over the years, I see a lot of these patterns. And what I usually do is I just set an alert right above the 50-day, right here. And when it triggers, I wait for confirmation. I go long, but I'm letting you know this thing is setting up for one, like it's really looking like it right now. Okay. So financials looking good. Let's look at IWM. IWM is just consolidating here. It actually looked really good. It looked like it was almost an A line this morning. Uh, I told folks specific levels, and I also should put this on here. Yeah. Whoops. Yeah. Right when we get above this level, you got a nice little A line. So it looks like it's building a little foundation right now. XLK. Well, you got support. You broke the 50. You got the 200 as support. Again, I don't want to make heads or tails out of this, but this is a high volume bar. So it better find some support in the next 24 hours. 24, 48 hours. This should hopefully find some support. And I don't like the fact that we tried to make an all-time high here and couldn't, which mimics the NASDAQ. Okay. Let's continue. XLP. Now remember, this is defensive. This is defensive, and it's looking really nice, making all-time highs. So you got financials looking good. You've got energy's looking good. everything except everything except technology, really. XLU. Let's look at XLU. You got that pattern consolidating between the moving averages, and if it comes right back up here again, you're going to see a nice pop. But that does not look bad at all. That does not look bad at all. I mean, I'm not really seeing anything bad here. XLB. Let's look how bad XLB looks. It's beautiful. Truly, truly beautiful. This is why the equal weight SPY looks like this. You take away all that market cap, you have a nice looking market. Okay, XLV, let's find another stinker. All right, XLV is just choppy. I mean, it's not great. It's right at the 50-day, but I'm not really seeing a major breakdown here or anything. Kane, do you disagree with anything I've said so far?
No, I don't. I'm
okay, all right.
Same page. Yep.
Yeah, okay. Well, just, want to make sure. Not really seeing anything here. I mean, there's just noise. Noise, nothing there. XLI, a beautiful trend. I mean, it's great. Now, SMH, the stinker in the room, right? Well, we're approaching the 50-day moving average. And typically we bounce off of the 50-day pretty well, actually. So let's see where this is going to go. But we got the 50-day right on top of us. And I honestly, I think this may be a little bit of an overreaction at this point. Because again, AMD earnings were not bad. As a matter of fact, I think they had really good forward-looking statements. So we may be a little bit overreacting to this. Okay. By the way, earnings, I mentioned it yesterday, they're up 13.4, 13.3%. They were expecting 8.2. So the numbers are not looking bad there either. So to me, this is the culprit right here. XLY. Well, consumer discretionary is taking it under the chin. You got a good 100-day moving average, but this is not good ahead of Amazon earnings, actually. But Amazon's only down 2%, and Amazon's not really doing much. Look at this. This is very interesting. We're breaking down, but relative strength is actually getting higher. Oh, I see why. The Dow's breaking down. Okay. So we're actually getting our strength is actually improving here. This is interesting. You don't see that often. Very interesting. Okay, let's continue. XBI. I bet you there's some good comments. I don't have the time to review them right now, but I'm sure Raleigh will read me the interesting ones.
Oh, yeah. No, comments are very, very supportive. They love this. They love the context, Roger, that you're giving to what's going on.
That's good.
It's that story. Every chart tells a story.
Mm-hmm. Matt, can you hook me up? Do you hear me?
Yeah, so I just want to say something. Kyra said everything
I
may
didn't hear
change
you,
this
Roger.
coming Friday with report on employment. There is no report on employment.
There's no
this
report.
Friday.
Yeah, there's no
freaking delayed because of this little shutdown. So
exactly.
Kyra, no employment report.
Yeah, don't even get me started.
I
mean,
know.
how long did they shut it down for? Like 2 days?
Yeah, they have the data.
Of course.
It's like we don't want to give it to you now.
It's really, and it would be really nice to get that information. Okay. Anyway, it is what it is. Okay. Real estate, XLRE. Nothing. Just nothing. Nothing. Folks, don't make something out of nothing. XLC, this will be interesting. Remember, this is the sector that I said is no longer going to lead this year, and so far we are correct on that. But it's a pullback from an all-time high, and those pullbacks are usually worth their weight in gold. I was actually reading Linda Raschke yesterday. She's a market wizard. I was reading her 12 golden rules on trading. You know what the first rule was? Buy the first pullback. Buy the first pullback from an all-time from a swing high. I'm like, I remember somebody else who says that all the time. Yeah, the first pullback from an all-time high is usually a good pullback. XRT. Just sitting there, not really doing anything. Not really doing anything at all. XHB, home builders. Home builders are looking pretty good. We got to get past this area here that has huge high volume bars. I bet you there's a nice delta bar right here, Kane. I mean, Gamma Pocket, like right here.
I'm sure
Right.
there is.
I'm sure there's a
Yeah.
nice Gamma Pocket right there and right here. Right there. These two spots right there. Anyways, this is looking really good right now. This is breaking out very, very nicely right now. No problem there. Again, keep reminding yourself that this is not this is not a broad market breakdown or anything like that. Matter of fact, let's look at the VIX real quick. Yeah, VIX is at 20. It's not at 40 or anything like that. It's getting a little elevated, but not too much. Not too much. There's no. Is there something in the world happening right now with
Yeah,
the
we
Middle East?
canceled the nuclear talks with Iran for Friday.
When did that happen?
Uh, 6 minutes ago.
Ah.
Mm.
Next time something like that happens, would you mind telling me?
I tried.
You tried.
Yeah.
Can you try bringing me something, hooking me up pretty quick?
Players work.
Can you hook me up? Huh? Thank you. Thanks. All right. Thank you, sir. All right. All right. Well, now we know. Now we know. Because I was like, well, where's this coming from? Where's this volatility coming from? But now we know. Yeah, I didn't know. It seemed like, thank you. I appreciate it. It seems like something happened, but we didn't. Yeah, I'm like, where did this come from? Okay. All right. All right. Let's continue where we left off. Having too much fun here with you guys. Okay, those are the major sectors. Now, because Kane is here, in honor of Kane being here, for about 10, 15 minutes, I'm going to go through your favorite stocks, and we're going to look at them right now together.
Yep. So here's what you need to do, guys. Put your favorite stock, just one. Put it in the
Yes.
chat panel. I'll record that and I'll start to feed that. And we're going to do a lightning round here.
Yeah, it'll be fun. We'll do it for
All
10,
right.
15 minutes, and then Kane and I can begin our
Let's start with PLTR.
PLTR, Palantir. Oh, it's on my short list today.
I not
Very-
leave for long.
That's he speaks and he's right. It may not be for long in light of them canceling. Yeah, it's a good point. It's down because of tech, but remember, this is a defense stock. And yeah, this is a defense stock. So it's on my chopping block. I usually don't like to engage with stocks that are down this much. What I usually like to do is wait for them to consolidate for a few days and then continue going down. But it's a nice short. It's got high volume. Volume is kind of falling off, though. I think it's a little overdone right now. It's a little overdone right now. I really do think it's a little overdone for now. Okay, go ahead, Matt. Next one.
NTR.
I mean, NTR. I mean Raleigh. Sorry. Now I'm confusing you with Matt, Raleigh. We haven't been there yet.
I'm in good company. Yep.
Yeah, this stock looks beautiful. I mean, it's a very nice A line. The only thing it's down on today, but this is a very nice look. See, I don't always say bad things. The only negative thing I could say is it's a recovery stock, but it's not here. It's already showing really good signs of recovery. So I'm not going to use that against it. But I like it. I mean, it's not perfect. It's very wicky. I would not day trade this stock at all because you get slapped all the time, and nobody likes getting slapped, right?
Nobody does.
But it's beautiful. What can I tell you? All right.
All right. Next one would be EGHT.
EGHT. The hell is this? This is a Momo stock. No Momo stocks. Those are for the morning show.
I got you. The small momentum. Yeah.
Yeah,
Okay.
those are for the morning show. I want to look at large cap stocks. I mean, most people don't even understand how to read these stocks, and these stocks don't trade. You can't look at these stocks the same way. You got to look at volume highs, and it's a whole different animal. It's a whole different world for this.
Yeah. So, folks, once again, and by and large, most people are giving us large cap signals.
Yeah. Let's stick to large caps, okay? Large cap stocks.
Next one on the list was AME.
Yeah, if you really like burnt to know something about this stock, just email me. I'm not that busy. AME. Ooh, look at this. Again, they're giving me a beautiful stock. What is this? I think they got into a conspiracy. They came to Kane's thing and asked Kane to give them all the beautiful stocks. Kane gave them the good stocks, and now we have the many. It's a conspiracy theory. It's a beautiful stock. It's great. I would wait for it to hit the 8-day, but it's a very nice stock. Again, I wouldn't day trade this stock. It just doesn't look like a day trading stock, but it's a nice look. It's nice, very nice. I wish I
right.
could tell you something bad, but
No,
I can't. It's
calling
great.
it like you see them. How
Yeah.
about AMD, Roger?
AMD, holy moly. Okay. I was hoping somebody would actually pick AMD. I think this is too much, a little too much. 20% of its value in 2 days, a really nice stock. I think we're coming near support right here. Here, you could. It's a lot of support right here, actually, in this area right here. High volume candle. We still have some gap to fill. So theoretically, you can come up to here, but honestly, this is a monster of a stock. Usually, these type of stocks have a lot of institutions. Institutions like to buy them at a discount, and this stock is not a bad stock. This is not a bad company. There's nothing wrong with this thing. So if this thing starts to do a little turnaround, which is very, very possible, you could be looking at a very nice move higher. But we're near. Actually, it's not here. It's right there. Yeah, there's your support level right there. There's two support levels here, 187, 199. Okay?
All right.
Yeah.
Next one on the list, COO.
It's really not doing much. And it's not doing much after a high volume bar here. I wouldn't engage with this stock. I wouldn't know what to do with it. It's just not doing anything. Yeah, so I wouldn't touch it.
All right.
I wouldn't touch it.
Amazon.
1 second. I want to show you guys something. Look at this. Look at how interesting this is. Look at how the Dow is losing relative strength, and look at how chips are gaining relative strength. Isn't that something? They're now they're now positive in relationship to the broad market, which I think is very interesting. Anyway, the things that turn me on. Okay, go ahead.
Amazon.
Amazon is looks like it wants to either defend itself at the 50 or the 100. It's just in this box right here. Looks like a double top. I can't make heads or tails out of this right now. I would not engage with Amazon. If it breaks this area, I'll engage. Or if it breaks this area, I'll engage. Right here,
it's got earnings tomorrow. That's probably why it's hard to read.
Yeah. Right there. So now it's been kind of hard to read. It's been just kind of in this range the last few days, but it's no man's land right now. Notice we haven't been trading the stock in months, and I love this stock. All right, let's continue, Matt. I mean Raleigh. I keep saying Matt.
This is the most asked for. MU.
Oh, MU Micron.
Yep.
Yeah, we made good money on this sucker yesterday. We did good on this stock yesterday. I think it's getting a little overextended here. It's one of the strongest chip stocks. Mind you, this stock is not going down because of the stock itself. I wouldn't be buying it. This obviously, I would wait for it to get back above the 8-day here. But I really like this stock. I really like this stock a lot. This will be one of the first stocks I would be looking at when the market comes back up. Yeah, it's a great stock. We did really well on it yesterday, very quickly, and made a good. But we got out of it like midday yesterday.
Sure.
Anyways, yeah.
Real quick, just to tie back to something you said a little bit earlier. So, pull back from an all-time high. What do you think of it?
Yes. Yeah, that's what I'm saying. It's a pullback from an all-time high. As a matter of fact, I think same here. I usually buy. I wanted to put you into the strongest semiconductor stocks. The strongest semiconductor stocks right now are Taiwan Semiconductor, which is also a little overextended. That's the one we're in right now. But I didn't get into this up here or up here. I got into this right here at the right here. And the idea was it was going to stop here, but obviously it did not. But now it's getting overextended. Now it's a little too much, way too much actually. But yeah, I like Micron a lot. Remember, it's a pullback from a swing high, and we're reaching overextended levels to the downside. So That's a red flag right there. But I like these two. Those are my two favorite chip stocks right now.
All
Okay.
right. Next
Yeah.
ticker, Roger, is HUM.
Humana. Ooh.
Hum.
Yeah, Humana. This was my weakest stock of 2025, and it's still coming down. One of the things you want to pay attention to when you see a breakdown like this, if you don't see it start coming up aggressively, that's a very bearish sign. See how it's consolidate. Remember those? Remember let me show you where I was going to. So, what was that stock that is coming down really hard today? It was, I think, the first stock we looked at. What was it? Well, anyways, remember I showed you if a stock has a big bar like this, one bar, it's Palantir. It was Palantir. Remember what I said here? Usually on a day like this, when you have a crazy bar like this, you want to wait for it to consolidate around here and break down again. Because the consolidation will relieve some of the pressure of the stock being so far away from the 8-day EMA. Well, here's a perfect example. Remember, it doesn't have to happen in one bar. It can happen in a few bars. So what was the stock we were just looking at right now?
We were looking at Humana.
Humana, yeah. So Humana, you see how it happened over a few days, but you see how it's not in a hurry to go back up here? That's the consolidation that I'm talking about in Palantir. And basically what I'm trying to say is everything I explained to you in Palantir applies just the same over here. That's what I'm trying to tell you. And this is an example of that consolidation near. See how it breaks down, just continues breaking down, but it doesn't jump back up. It just consolidates here. The more it consolidates here, the higher the odds it'll break down again. This goes with what I was showing you yesterday. Look.
Mm-hmm.
Remember yesterday versus
the
same thing
stair
here.
steps. Yep.
This is much weaker. You see that? This is what I was trying to explain to you. Okay? We talked about this yesterday. This is the same concept. Sorry, I didn't mean to get into all of this. Let's continue.
No, this is great, Roger. And by the way, Roger, we have about 3 to 4 more minutes in the lightning
thank you.
round. So let's see if we can get through 5 or 6 of these.
Sounds good.
SCCO.
Oh, yeah. Southern Copper. Oh, that is a beauty. Nice stock coming off of high swing. Here's the reason why I don't like to touch these stocks too much is because it's like trading a commodity. The SPY is not going to give you a gauge. You're going to have to actually look at the copper. Same thing with crude oil stocks. You got to look at crude oil. So I try not to give you guys too much of them. But all in all, I really like the stock. It's coming at the 15-day moving average. This will be the kind of stock Matt would put into one of our swing trading programs. Wouldn't it, Matt? Make a note for yourself. SCCO. Okay.
Mm-hmm.
And I'll give you a couple more at the end of the day. But these stocks, again, they haven't broken their structure. They're still in an uptrend.
All right. Roger, the next one would be FCX.
Oh, yeah, FCX. I recommended this one yesterday. I told folks I really like this. Again, if copper turns around right now, it's going to look great. Overall, you got an A line right here from an all-time high. That's a really nice pattern. Matt, make a note of this one. Actually, I like this one better than I like this one twice as much as I like the other one because this has more option liquidity. Write this down, Max. FCX and earnings are not for 2.5 months. Okay, you got it.
Yep.
Okay, thank you. Yeah, this is very nice. If we bottom out today and if we start coming back up, this is a very, very, very nice swing trading setup right here off of the 8-day. But I would want to see this above the VWAP right here. But that's attractive right there. That's very attractive. Okay, sorry, didn't mean to.
Oh, Roger, this is wonderful. Oracle.
This has been on my shit list. Excuse my French.
For a while here, yeah.
And it still is. Nothing changed. We're getting too far from the 8-day, and you see how the price is approaching the red line right here. That means we're getting a little overextended to the downside. I think a lot of these tech stocks right now are getting a little overextended to the downside. Okay, especially ahead of Google and Amazon earnings. I think this is just too much. Way, way, way too much right here. But yeah, it's still crappy. But I'd prefer it close to the 8-day, which is why I like that other stock so much today. The one we just looked at a minute ago, FCX, except upside. But nice short. This is a good day trade. If volume stays up here or picks up a little bit, it may be a good day trade if it comes up to the VWAP and bounces back down. Anyways, let's continue.
Excellent, Roger. We have time for 3 more. The next
Yes.
one is NLR.
NLR. Huh, I never traded this one. What is this? It's not a stock. This is an ETF. This is a combination of stocks.
Okay.
I mean, this is just following energy right now. Or nuclear, excuse me, utilities. This is just following nuclear right now. It's bouncing off the 50. It's overextended. To me, most of what I'm seeing today looks like it's overreacting because it's coming near these red bars. Anything red or green means look at what happens when it comes to the green. See this?
Yep.
Look at now it's just the opposite end of the same coin. Okay.
Yep. Overextended. Next
Overextended.
one. Here's a big one. NVIDIA.
Oh boy, I was kind of hoping we'd see this because I don't know what it looks like right now. It hasn't been hot. It's been kind of doing what Amazon's been doing lately. Just nothing. And we've been staying away from it. It's breaking down, but you got the 200-day right here. You're in a very nice structure here. This structure actually extends a lot further. It actually goes all the way here to this bar, which means we just kind of goes. You're in a little structure here, and you have the 50. I mean, look, I don't think anything's going to happen with NVIDIA. I don't think we're going to break down. I don't think anything nutty's going to happen. I think this is just an overreaction. To be honest with you, I don't even know what it's an overreaction to because from what I understand, please correct me if I'm wrong, AMD had really good numbers.
Mm-hmm.
The numbers were fantastic. They weren't even that bad. And I'm not defending the company. I have no shares of AMD. I couldn't care less. But I think this is just a little too much too fast.
You agree with that also, Kane?
Yeah. I haven't seen anything fundamental to say otherwise.
I mean, all we've been seeing is, especially, you remember the end of last quarter when Micron and a couple of others came out in the end. All we saw was AI is going great. Everything is going peachy. We're going to increase spending. We're going to increase. I mean, think about it logically. Do you think you're going to put that genie back in the bottle? Do you think I'm ever going to draw Clyde pictures by hand? You know what I'm saying? I mean, it's pretty nifty stuff, right? It's not going anywhere. We're not going to the Stone Age. We're going. It's going to go. It's going to go. It's going to take a long time to get there.
Yeah.
But it's going. It's going. It's not stopping.
And I could just share something, notionally. I have 2 sons and a daughter, and they're both working in very large companies. And we have a discussion this weekend, just similar, Roger, to us here at Financial Media Corporation, where the focus of these all-staff meetings is encouraging everyone in the company to embrace the AI tools that are being created to drive productivity, to drive efficiency, et cetera. And it's because, once again, these companies are spending hundreds of millions of dollars implementing this technology, and the question is now we got to get people to use it. I'm just setting that to the side. It's not going away at all.
Oh, no. What's going away is everything except AI. Yeah. Physical labor is going away. That's what's going away. No, but my beef is this, and I just want you guys to understand where I'm coming from, my logic about this whole thing. To me, AI is when a machine can actually learn and start making decisions on its own. Okay? Right now, what you guys think is AI, it's basically a programmer programming into the machine a gazillion different scenarios. And the machine picks the best scenario based on the one to program. So what you're really seeing right now is just fast computer power. Okay? If computers could do this via programming 10 years ago, the problem was chips were too slow to integrate, so the decision-making process would take too long. Basically, it would take 8 hours to draw a picture of Clyde instead of 3 minutes, if you want to use that example, or not 3 minutes, right. 10 seconds. But right now, so we're not at the point where the machines can fend for themselves, so to speak. True AI is going to be when you can bring a housekeeping machine into your house, and that machine will start learning your patterns, your ways, your behavior, learning how you react to things. That's real AI. That's real AI. When you can have a conversation, when you can get into your car and you can be like, okay, all right, let's do it. Let's go. Where where the computer is almost like a human being. To me,
Yep.
that's AI, real AI.
I
And
had
we're
a
not
good friend. I had a good friend tell me. He said, "Riley, it's like we're at the Wright brothers stage."
exactly. That's exactly right. We are right
Just
now.
imagine what's going to happen. Anyway, Roger and Kane and everybody, thank you so much. We were able to review 15 tickers. I probably have close to 110 on my list here, Roger. But thank you, everybody, for go ahead and giving us our tickers. I know you guys love these lightning rounds. We like to try to do this at least once a week, if not once every 2 weeks. But that was terrific. So, Roger, it's about 10 minutes to 1 at this point in time. And I think it's a good time to have Kane step up a little bit and share with us what he's going to be talking about today.
I agree, except I need to do one more thing. I created a watch list for everybody today, and I didn't give it to them, so I'm just going to post it in the chat for everybody. Okay.
Okay.
That way, you guys will get my. So here's my shorts. Okay.
Was this
It'll
from
only
this
take.
morning or is this
No,
the
no,
midday?
no. This is from like an hour ago.
Okay. Yep.
Yeah. BMY. I'm almost done here. Hell. Oh,
Awesome, Roger.
I'm typing it in right now. So I figured I did it. Might as well. I don't want it to go to waste, you know. STZ and longs. Here's my longs. So those are the shorts. Let me give you longs now. Or wait a minute. Those were my. I just gave you those are my longs. Excuse me. Those were my longs. Those were my longs. So now let me give you my shorts. Okay. All right. You'll be able to tell which ones are long and which ones are short based on the pattern, obviously. But okay, so these are the shorts. Okay, the longs are shorts and the shorts are long. You can see if they're like this, they're longs. If they're like this, they're shorts. All right, Kane. I don't mean to interrupt. I don't mean to interrupt our class. And all right, are you ready, my friend?
I am, yes.
All right, folks, we're going to reveal. Yes, we're going to reveal market data that rarely show you how moves of 0.5% per day on average can really make money, can give you these daily payouts. I'm very excited about this. Also, I wanted to say, correct me if I'm wrong. Is this a 1-year anniversary?
Very close to it. Yeah. I don't know exactly when, but we're pretty close to it. Yes.
I'm a sentimental kind of guy, and I think we are at a 1-year anniversary. So,
That's
folks,
my
let's give
understanding
Kane.
as well. Yeah, Kane.
That's right. Let's give
Okay,
Kane a
all
big,
right.
1-year anniversary. That's right. That's right.
And
All right,
listen,
folks.
Roger, I also just quickly housekeeping. I need to let the little folks on YouTube know that we're going to stop the streaming because we're about to move into a session that we're not allowed to put on YouTube. So for those of you in the YouTube channel, please join us here in the Zoom room so that you can enjoy the rest of today's session. All right,
Absolutely.
guys.